Welcome back to my channel. Today let's me introduce unit trust. What is a unit trust? A trust fund, unit trust fund, is a company such as a bank or financial institution that collects money from public investors and then hands it over to professional fund managers for planning and investment. They will use the money to buy stocks and invest. Trust funds are also an option for many friends who don't know much about stock investment but want to start trying small investments. According to past data, compared with stock investment, one of the most attractive and better benefits of fund investment than the stock market is the return. The chance of return or interest, return percent, is higher than the interest on time deposits of general banks, but the risk and volatility are much lower than investing in the stock market. Many people spend most of their time busy running around dealing with daily life and work, even more, and we lack time to improve our investment knowledge. So with the help of professionals, we can improve our investments, diversify our investments with lower risks and earn returns. Fund investment methods and strategies depend on different funds. Each fund has its own prospectus, describing the fund's investment rules and strategies. Fund managers will integrate and analyze different investment tools and sort out investment portfolios with different levels of risk. The fund brings together the funds of many investors to form a larger fund pool for concentrated investment and managed by professional fund managers who have rich investment experience and professional knowledge and can make effective investment decisions. Diversified investment in a variety of asset classes to spread risks and improve the safety and stability of investments. Most funds can be bought and sold in the market and have high liquidity, and investors can redeem or transfer them as needed. Type of fund. According to different investment objects and investment strategies, funds can be divided into the following main types: equity fund, bond funds, mixed asset fund, money market funds, real estate investment trusts, REITs. Equity funds mainly invest in the stock market and aim to achieve higher investment returns through capital appreciation. This type of fund is suitable for investors with a higher risk tolerance, because the stock market is volatile and investment risks are higher. The characteristics of stock funds include high return potential. Long-term returns from equity funds are generally higher than those from other types of funds, but come with higher risks. High volatility. The stock market is highly volatile, so the net value of stock funds will also fluctuate greatly. Diversified investment. Invest in different companies and industries to spread investment risks. Bond funds invest primarily in government bonds, corporate bonds, and other fixed income securities, with the goal of achieving solid returns through regular interest income and capital preservation. The characteristics of bond funds include stable income. Bond funds provide stable interest income and are suitable for investors who pursue stable returns. Low risk. Compared with stock funds, bond funds have lower risks and less volatility. Capital preservation, suitable for investors who hope to obtain a certain amount of income while maintaining capital safety. Bond funds invest primarily in government bonds, corporate bonds, and other fixed income securities, with the goal of achieving solid returns through regular interest income and capital preservation. The characteristics of bond funds include stable income. Bond funds provide stable interest income and are suitable for investors who pursue stable returns. Low risk. Compared with stock funds, bond funds have lower risks and less volatility. Capital preservation, suitable for investors who hope to obtain a certain amount of income while maintaining capital safety. Mixed assets funds invest in both stocks and bonds with the goal of balancing risk and return through diversification of asset allocations. This type of fund is suitable for investors with moderate risk tolerance. The characteristics of mixed assets funds include balance risk and reward. Balance risk and reward by investing in both stocks and bonds. Flexibility. Fund managers can flexibly adjust the investment ratio of stocks and bonds according to market conditions. Diversified investment. Reduce the risks caused by fluctuations in a single market through diversified investments. Money market funds mainly invest in short-term money market instruments, such as treasury bills, commercial paper, and bank certificates of deposit, with the goal of achieving capital preservation and liquidity management by investing in low-risk short-term financial instruments. Characteristics of money market funds include low risk. Money market funds have the lowest risk and are suitable for conservative investors. High liquidity, it can be redeemed at any time and the funds can be used flexibly. Stable return, although the rate of return is low, it provides stable interest income. Real estate investment trusts, REITs, are funds that invest exclusively in real estate assets with the goal of generating rental income and capital appreciation from investing in real estate. Features include high yield, provides higher return on investment through rental income and real estate appreciation. Diversified investment, invest in different types of real estate, such as residential, commercial real estate, industrial real estate, etc. High liquidity, listed on the exchange, it can be bought and sold like stocks and has high liquidity. As a collective investment vehicle, unit trust funds can help investors achieve asset appreciation and risk diversification through professional management and diversified investments. Based on different investment objectives and risk tolerance, investors can choose the type of fund that suits them. Whether it is a stock fund pursuing high returns, a bond fund seeking steady returns, or a money market fund seeking low risk, each fund has its unique advantages and applicable groups. By choosing the appropriate fund type, investors can develop reasonable investment strategies based on their financial goals and risk preferences to achieve financial freedom and personal growth. On my YouTube channel, I will share more knowledge and experience about fund investment with you to help you better understand and use these investment tools to achieve your financial goals. I hope my sharing can be helpful to you. Thank you all for watching and supporting.